Okay, we continue on the part 2 of this topic. Okay, so just now we stopped on the impact of diversify into the foreign financial analysis. Okay, so in the part 2, since we said the diversify in the accounting standard, in the culture, in the nationalism, which will give impact on will give the different set of the financial statement. So when we want to do the analysis, okay, it give we have a difficulty. Okay, so since they are diversified, since the diversify in the financial statement just now give impact to the analysis of foreign financial statement, then the analyst should have a coping mechanism. So how analysts face, or how the analysts handle this diversify. Okay, so just now we are already looking on the impact of diversify, which is it result the measurement differences. So if we in order to deal with the measurement differences, what the analyst should do, the analyst have to adopt a mutual fund, okay, approach to investing. Number 2, analysts may restate the foreign GAAP to domestic GAAP. For example, the analysts want to analyze China financial statement. So of course, the China financial statement use the China GAAP. So how? What is the coping mechanism? The analysts have to restate the financial statement just now, okay, using the China GAAP into the domestic GAAP. For example, Malaysian GAAP or UK GAAP and so on. Next, restate the foreign GAAP to IFRS. This is another coping mechanism. Instead of you restate the foreign GAAP into the domestic GAAP, we restate the foreign GAAP to IFRS. Okay? Another mechanism is the analysts have to rely on non-accounting data using a dividend discount model or cash flow data. Okay, and the analysts also, in order to cope with the measurement differences just now, the analysts have to immerse to the country, okay, to the foreign country just now. For example, you are analyze the China financial statement just now. So the analyst have to immerse himself or herself in the language of China, the currency, and GAAP of China. Okay, so this is among the coping mechanism. For disclosure differences, okay, so what the analyst should do, the analyst can visit the company. Okay, so because you have to check. For example, let's say we just said that for the developed country, the disclosure amount or disclosure information is huge compared to the emerging economic country, or compared to another political bloc of country. For example, you are talking about China. Okay, the disclosure of information in the financial statement of China is very limited. So what should the analyst do? So analysts have to visit the company. The analyst may attend the company roadshow, because from the roadshow you will know better about the company. Okay? Alter the investment classification from speculation grade, means this is from the poor disclosure to investment grade, which is good disclosure. Or can also alter investment strategy from active investment, which is a good disclosure, to passive or non-investing. This is categorized as a poor disclosure. Okay. For audit differences, what the analyst should do, okay, so the analyst should do some research on the auditing environment in the country that being analyzed. Okay? The analyst also can ask for a second audit opinion or engage a recognized audit firm when confident in the integrity of the ATAS function in DAP. Okay? And the analyst should assess a higher risk premium for audit risk. Okay, we move to the next subtopic, which is prospective analysis. So if you recall back the business strategy framework just now, this is the last stage, which is the prospective analysis. So what is the prospective analysis? So the prospective analysis, we said, this is we are focused on it's a focusing of firm prospect based on assessment of firm business strategy, accounting policy, and financial analysis. So just now we said the first stage we have to analyze, the analysis have to analyze the business strategy. Then the analysts have to analyze the accounting policy, have to analyze the financial analysis using the ratio. So using all the information from this analysis, then the analysts do the prospective analysis. What is the future? Okay, what is the way forward of this firm? Okay? So the complicating factors, of course, even though we already have information from the earlier stage just now, but of course, the analysts still deal a difficulty when they do the prospective analysis, and the difficulty is actually due to some complicating factors. First, of course, because you are deal with the foreign financial statement, yeah, so you will deal with the fluctuating exchange rates. Especially if you deal with the country that the exchange rate is very fluctuating, okay? So it will make it difficult to forecast the firm future cost and revenue, okay, when it's invoiced in the foreign currency. Another one is the national variation in measurement, disclosure, and auditing practices, including the national enforcement regime. This also will make the prospective analysis become complicated. The third one, the national variation in pricing risk. So this one also make it difficult to select an appropriate discount rate, okay, for valuation purposes. Okay. Another one is valuation multiples such as PE ratio also vary from country to country. So this one is also complicating appropriate corporate valuation. What does it mean? Meaning the unit that you use for the PE ratio, it's vary from country to country. For example, in Exhibit 9.3, so if you look, the figure here, okay, international price, the index that they use, okay, so if you look, it's vary from the smallest is, if we look, the smallest is 7.3, which is Russia, then the highest is 33.6, okay. So what is mean? Is it means that Russia, the PE price earning ratio is lower than Japan? Yeah. So if we look, actually this exhibit show that PE ratio vary across countries. At the end of 2006, okay, 2006, PE multiples range from 7.3 in Russia to 33.6 in Japan. Okay, so this is, we are looking for the firm listed on the stock exchange in Japan. Yeah. But what account for this variation across national boundaries? Why this is happen? Is it because of the company performance? Yeah. So among the factors that contributed for the variation of this PE, of course, because of the national differences in accounting principle. This is one of potential source of cross-country ratio variation. Yeah. Such difference, for example, cause PE ratio in Japan to generally be higher than those in US. So if we look in US, okay, is 16.6. Even UK, 15.8. Another one, Hong Kong, is also one developed country, 11.8. Okay, so if the different cause, if we look, is actually, okay, what is mean is the different from the PE ratio higher in Japan, okay, than those in United States is actually, if we look, if you recall that reported earnings in Japan, okay, reported earnings in Japan are lower in the US for comparable companies with similar financial performance. This is from the finding, okay, from the research finding. However, after adjusting for accounting differences, PE ratio in Japan is still much higher in the United States. So normally, we cannot depend on the PE ratio. Okay, we cannot depends only in the PE ratio. The gross means this is unadjusted PE ratio. So as an analyst, normally analysts have to adjusted PE ratio. We will look on the adjusted PE ratio. Okay, so another further issue. All four stages of business analysis, the one that we discussed earlier, which is business strategy, accounting policy, financial analysis, and prospective analysis, may be affected by the following factors. Okay, we are talking about information access, okay, the availability, okay, of the information, the timeliness of the information, either the information is available on time or not, the language and terminology barriers, yeah, the foreign currency issues, and the difference in types and formats of financial statement. So this is the 9.4 is actually is the website that provide information highly relevant for the company research. Normally, information about thousands of companies from around the world has become more widely available in recent years. You just Google, then you can find it's free information. It can be accessed freely. So countless information sources are appearing on the World Wide Web. Okay, especially if we are talking about the developed country like US, UK, Canada, okay, and so on. Companies around the world now, of course, they have the website, and the annual report are also can be accessed in the website, and it's free of charge. Yeah, most of it is free of charge. Okay? We are talking about the developed country. Of course, we still have a problem with the developing country, yeah, and also and especially for those emerging economic country. Yeah. So this is among the website that you can check for free information if you want to do the company research. Yeah. Yeah. And this is the example of what the analyst should do if the analyst deal with the foreign financial statement. So the analyst should translate, okay, all those financial statement, balance sheet, statement of income, and statement of cash flow. This one you already learned in AFA 2. Okay, so the analyst should translate first before do the analysis. Okay, so the analyst will translate into the local currency balance sheet. Okay. Then, okay, what the analyst do? The analyst will do the analysis of exchange rate effects. All this you already learned in the AFA 2. Okay. Okay, so what is the pitfall? So this is the last learning outcome. Pitfall in conducting international ratio analysis. Okay. So of the difficulty mentioned previously, of course, this is we are referring all the difficulty that we already discussed. Another one is lack of understanding of political, legal, and business environment of the foreign country. Okay. So example of environmental difference, we are talking about the government system. For example, UK and US government are more laissez-faire, okay, where they ensure free market, self-regulation is encouraged. While for German and Japanese, they are more active in orchestrate the growth. Okay, so government has a major role in the market regulation. So Malaysia is actually, it's more to second situation. For the legal system, you already learned before. We are talking about common law and court law. Okay, so the orientation is different. Okay. Another one is fiscal system. So for example, we are talking about UK and US. They make a distinction between financial reporting and tax reporting. So there are two different reporting. So same as Malaysia. But for German and Japan, they exhibit a degree of tax block conformity, where parents' company financial statements are important. Okay. Another one is the capital market. UK and US markets is oriented more towards equity investor. They are more equity oriented, yeah, with significant individual ownership. So earning tends to have an optimistic bias. While for German and Japanese market, traditionally oriented towards creditors. Okay, so earning tends to have more conservative bias with more smoothing opportunities. So if you look on China, for example, China is more government oriented. Okay, because the most of the financial sources for the China company is still China government. Okay, so that's it, the end of topic for this topic. So I will post the tutorial question. Okay, then you please discuss the tutorial question in the MS Team.